Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank by applying the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sari Ibrahim. With us today, I have a special guest. His name is Brian O'Neill. He's an experienced real estate investor, author, coach, and podcast host. In his real estate business, he specializes in creative finance strategies to purchase properties, offering flexible solutions for both buyers and sellers. Brian uses his 25 years of phone experience to solve sellers' challenges and help them move on. He wrote an ebook on the topic titled How to Master the Phone in 90 Days. Brian spent 25 years in corporate sales, stuck in a job he didn't like, and being away from his wife and young son. After decades of trying, Brian was finally able to break free and start his own real estate business. And now he helps others, it's aspiring entrepreneurs in similar situations, break out of their W-2 prisons through his coaching program and his podcast called the W-2 Prison Break Show. Brian believes strongly in giving back. He has experienced many challenges and roadblocks in his life and had had lots of help from family, coaches, and mentors along the way. Providing the highest value to his clients to help them reach their dreams is something that drives him on a daily basis. Brian, welcome to our show.
Thank you, Sari, and I appreciate that awesome introduction. Look forward to chatting with you today.
Yeah, I'm glad to have you on. You know, part of the core of this podcast is talking about real estate investing, but kind of from a different perspective, not so much of a conventional way of real estate. And I think you're a perfect fit for that because this is exactly what you do. Before we get further into real estate, do you mind sharing with us more about your background and what you do today?
Yeah, absolutely. So as you had mentioned in the bio there, I was in corporate sales for most of my life, 25 years, like right out of college, right? I did what most people are kind of programmed to do. You know, I went to school, I did well in school, and I got a job right out of college. I worked for Enterprise Rent-A-Car because they had a great management training program, and you know, that's what my parents wanted me to do. And that led to a career in sales for a long time. And I don't regret that. I don't regret the skills that I picked up and the experiences. It was just, I was in it for too long. Right. And ultimately I broke free from that job. And I was really the motivation from my young son, who I was away from because I was traveling quite a bit. I was gone every other week, and I would come back and he would look different. He would sound different. And I was like, I can't miss this kid grow up. Right. And I'm away from my wife as well. So that really drove me to do something different. And I had always wanted to do something in real estate. I was too scared. I was too scared to fail. I wasn't mentally prepared. And that turned into years and years and years of, you know, just hiding really behind education. And finally, like my son telling me, "Hey, Dad, I don't like it when you leave the house." Like that just broke me. But ultimately, I'm grateful for that because that's what drove me over the edge to do something about it. So the biggest thing that I did, which was different from the 20 years I was trying to do something, was I hired a coach. Right. So I'm huge on coaching, and that was one of the biggest mistakes I had made in my life, Sarah, was not having a coach or a mentor. Like after college, it was like, okay, I got this all figured out. Now I'm good. I don't need anybody to help me. Once I invested in myself and hired a coach, I was really able to fast forward. And the last several years of my life, I've accomplished more than the last 25. I mean, and that's no joke. So I was able to leave that job. Just after 9 months, I was doing real estate on the side, and I did enough deals to be able to, you know, not totally replace my income. I did some other things that we can talk about, but I was at least able to have a runway to where, you know, I was able to comfortably leave that job. And now I don't miss his life. I don't miss the kid's life, which is great.
Love it. I want to unpack so many things you mentioned. So you have this job, right? You're on the edge of going self-employed. What were some of the top obstacles like you were thinking that, like, you know, this is in the way and I can't really take this leap because of these things?
Yeah. So, I mean, fear number one for most people is money, right? And the fear of not having that steady paycheck, not having the health benefits, not having the retirement account, and just the steady check that's coming every 2 weeks or whenever you get paid like that. That was a concern for me. And I think it's a concern for a lot of people that stay in their W-2 jobs. And here's advice that my coach, again, I talk about coaching. This is what he said to me. This is some of the best advice I ever got. Because it was right around the time where I started thinking about leaving. Like, should I stay? Should I do both should I do both real estate and my W-2? And he said, hey, Brian, look, the job is the risk. The W-2 is the risk. And I never thought about it that way, but he was 100% right. 100% right. Like, I was expendable. I could have been gone at any moment. Like I said, I was around for a long time. So I survived 3 rounds of layoffs after the '08 crash. And I could have easily been let go at any of those times. And for me, at my age, at that time, I was, I'm in my late 40s, but, I was in my, late 30s, early 40s. No one was going to hire me and pay me what I was earning. So that really got me thinking about, well, look, I need to find different ways to make money, and I need to be in control of that and not have somebody else control whether or not I get to work, right? Or I get to earn income.
Yeah, definitely. And before we started recording, we mentioned Mark Willis. He's my mentor. And speaking of mentors, host of Not Your Average Financial Podcast. And he's mentioned on a lot of podcasts, right? Like, when you have one source of income from your W-2 job, that's the biggest risk you could take in your life, is having one source of income. It only takes one, new CEO or one new company acquisition, and that's it. Like, you could be there. They really don't have to give you a reason to let you go, right? There's no logic behind it. It could be that's what they just feel is the right move to make. And you're right. That's a risk in itself, just having one source of income. So, how did you find your mentor, and what are some things you learned from him or her?
Yeah, so it's a him, and I found my mentor through a podcast that I was listening to. It's kind of interesting how things work out sometimes. If when you're asking for stuff, it'll eventually come. It may take a long time for it to arrive, but I asked for my coach, and he showed up, and here's how it happened. I had been trying to do real estate deals for years. I mean, I acted like an investor. I was looking at deals. I was looking at multifamily mostly. And my biggest fears around doing the deals was, again, around money. Like, I wasn't comfortable investing my own money, which I had. And then furthermore, I wasn't comfortable asking other people to invest alongside of me because I didn't want to let them down. So it was all like, I was all up in my head, right? And it was right around that time where I heard my mentor talking on a podcast that I listened to. It was Rod Cleef's podcast about multifamily. And he's talking about how he bought his office building, his commercial office building, on owner financing. No money down, none of your own credit. And I said, this is exactly what I've been looking for. And I went right to it. And I ended up hiring him as my coach. And now I bought a bunch of properties without any money and any credit. Now I don't have fear anymore about asking people for money or to invest alongside of me. It was just at that time, that's what I needed. And that's how my coach arrived.
Now, Brian, I'm intrigued. So tell us more. So is this also known as seller financing?
Yeah, seller financing, or terms, as it's often referred to as well, where you're basically using the seller as the bank.
So could you give us an example of like a property, the cost of it, and then what the terms were?
Yeah, absolutely. So I'll give you a kind of a generic example. And this is true of, so about 1/3 of all houses in America are owned without a mortgage, free and clear. That's a lot of houses. So a seller who owns a $300,000 house with no debt, they have a couple of options. Okay. The first thing they can do is list it conventionally with the realtor. They can do for sale by owner. They can take that lump sum, 300,000, whatever it is, after all expenses. What are they going to do with it? Do they really need all that money? What are they going to do with it? Or they can become the bank. There's a reason there's banks on every street corner, because they loan money out, they charge interest. So as the owner, I can go to him and say, hey, look, I'll give you the 300 grand for your house,
Mhm.
or maybe even more if I get the term that I want, the length of time, and I'll make payments to you. I'll make payments to you on a monthly basis. I'll own the house, so the ownership will transfer to me.
Mhm.
I'll pay the taxes, I'll pay the insurance, and on or before the date, like the balloon date, whether it's 10 years, 15, 20, some might go 30, you'll get the rest of your money. Now,
Mhm.
if you charge interest, if you pay the seller interest on that, even a small amount of interest, they're going to get way more than the 300 grand, not a
Mhm.
little more, way more.
Mhm.
So that's why I say, if you don't need all that money right now to do the next thing, why wouldn't you do that?
Mhm. Okay, that makes sense. So, for example, somebody has a $300,000 property. They have no debt, no mortgage on it. They want to sell it and leave that property. You would go to them, buy that property from them, seller financing terms. So the seller is the bank in that situation. In
Mhm.
essence, they are loaning you $300,000 to buy their house. Am I right about that?
100%. They are the bank. They're carrying the note,
Mhm.
but they have no financial responsibility for the house whatsoever in terms of like maintenance and repairs and upkeep. It's just, hey, they're just getting a check every month,
Mhm.
mailbox money.
And then if it's, for example, what's like a typical interest rate that you've seen?
So it does vary. The
Mhm.
longer the term, typically the better the rate. We have some where it's just principal only payments, which if you can get in a transaction like that, it's a very healthy deal for you
Mhm.
as the buyer. Now, typically a seller might be in a distressed situation if
Mhm.
you're at principal only payments, and sometimes you just pay a premium. I mean, I have no problem paying over market value
Yes.
if they're going to take principal only payments. It might be an inherited property, the parents passed away and they inherited the property. They just don't want to deal with it,
Mhm.
and they don't want a lowball cash offer. So this is a way for them to get some income. There's a bunch of different scenarios.
Mhm.
Interest on a longer term could be 3, 4. I've seen some that are 5%. Again, if the seller is willing to give us the term that we need, we're willing to give them the price and the interest that they want.
Got it. And then this would be beneficial to the seller instead of just conventionally selling the property. They could potentially get more money from doing this route than just hiring a realtor or real estate agent and then just posting the house on the market.
Yeah, totally. I mean, if you've ever if you ever purchased a house and looked at your truth and lending statement,
Mhm.
you're on over 30 years and you're paying 3% interest, you're typically paying double for the
Double.
house.
Mhm.
So that's exactly what the seller has the ability to do, is earn double on the house. And it's backed by real estate. Real estate's not going to zero
Yep.
ever. So, that's the ability that you have. So as long as they can get of the mindset that, hey, I can get way more money if I take it over time, and it's also, I'm not a CPA, I'm not giving tax advice. It's better from a tax standpoint
Mhm.
versus taking this lump sum that, what's going to happen to that $300,000, or let's just say you have a $600,000 house. What's going to happen to that big sum of money
Mhm.
down the road? Typically, when people are not educated, they get a large sum of money, they may mismanage that, or they typically do mismanage that.
Yeah, I would say 80% of people would mismanage large sums of money. And we could
Totally.
look at those stats from people who win the lottery. The majority of people who win the lottery end up in a worse financial situation. So I get what you're saying. Instead of selling this property, for example, for $300,000 and getting a $300,000 lump sum, you could turn that into, let's just say, $1,200 a month or $1,500 a month over the next course of time. I'm giving you a steady flow of income. And this, in the long run, like you said, if you actually take the number 72 and you divide that, let's just say 3% interest, you take 72, you divide that by three, the rule of 72, and you come up with 24. It's every 24 years you double your money. Let's just say
Yeah.
you charge 5% interest. You take 72, you divide that by five, it's even a shorter period of time until you go double your money. And this is where thinking like a bank comes in, right? It's how many times can I double my money over time, which beats getting lump sums of cash, the conventional way at a sooner basis. So I love this, and I understand this more now, the whole terms part. So how do you find these properties?
Okay, great question. So we find properties in a variety of different ways. We have a lot of different resources that we use, but the main resource that we use are people who are actively trying to sell their house. So they're on as a for sale by owner. Maybe they're an expired listing, which means that they have entered into an agreement with a realtor, and that agreement expires after 3 or 6 months and they've taken it off the market. We reach out to them at that point. And there's normally some pain involved. Like, look, when you're buying houses on terms using creative financing, most people are going to sell conventionally. I'm not lost on that. I'm really not. So the like perfectly remodeled house that, is in a great neighborhood with great schools and, it's ready to go and people are lining up to buy it. Like, I can't help that seller.
Yeah.
You know what I mean? So I'm looking for, but I can tell you this, and even with the market being the way that it's been the last really year, in any market, there's always going to be death, divorce, job loss, job relocation, just some type of, or inherited properties, tired landlords. There's a ton of landlords out there that are just over it from COVID because they weren't getting paid. So those are the people that we're really trying to talk to and see if we can solve their problem and provide a solution for them using creative financing. And then we look at specific lists of, sellers that might be in a certain situation, but mostly it's active people trying to actively sell.
Okay. So you would find these multiple ways, expired listings. You're actually calling these people, right? You're calling them, getting them phone numbers, reaching out to them, asking them, you're looking for the pain, like what's happening right now. What kind of problems you need to solve?
Conversations are very, very simple. And even people who are trying to rent their house, like some people who are trying to rent may have tried to sell. So in the conversation, when we talk to the sellers, and I have a team that does this, we're basically trying to understand, hey, look, I saw you had a house for sale. I just want to learn a little bit more about it because I'm interested in potentially buying it. It's a very short conversation, and we just want to know what their situation is. Like, hey, why are you selling the house? Where do you need to go? The seller who needs to relocate for work or for family, and they've already left, and they haven't been able to sell their house, and they're going to potentially carry 2 mortgage payments. Like, that's someone we can help with terms. The person who is like, I just want to see what I can get for it. Like, they're not motivated, right? They're just looking to see if somebody will buy their house, and that's okay. And we tell them, like, look, we're probably not going to be able to help you. So we're just trying to see if they're open to this idea of a non-conventional way to sell your property. And then we, we educate them and we take them through the process and we help them. We try to solve their problem.
Gotcha. And then could this be done in like all 50 states over the phone?
It can, and it is. I mean, you can certainly do this. You can certainly do this virtually. I do this in 3 states. I'm in Illinois, so I do it in Illinois, Wisconsin, and Indiana. I can really do it anywhere. You just have to have the right people in place, boots on the ground, if you will, in those other areas to be able to, look at the properties because you do want to see them. And then just have the right resources in place. But yeah, you can do it. I know someone who does creative financing who lives in an island in Canada and does deals in Baltimore.
Is there any licensing needed? Like, do you have to be a licensed realtor or real estate agent or broker to do this?
Yeah, certain states have requirements, not necessarily on licensing. Now in Illinois, if you want a wholesale deals, which means I get a house under contract and I want to flip the contract to somebody else, you have to be licensed.
Okay.
So I'm basically buying a house, like the deed's transferring to me, and then I'm either renting it or selling it to somebody on owner financing. That doesn't require a license.
Oh, gotcha. Okay. Whereas where you represent the buyer or seller, that's where the licensing can come in.
Yeah, correct. We're not representing. I'm actually taking ownership of the property, and then versus there's just no transfer of funds. Like, I'm not just giving them cash, and I'm also not ever flipping the contract. So that you can't do. You can do it. You can do it once a year in Illinois. Beyond that, you have to get your license.
Got it. Now, Brian, could you explain to me, please, like, where does the where does the investment opportunity come in? I get how the terms work. I get how you can help the seller get out of the property, but how does it help the person who, for example, I have, let's just say 20, $30,000. I want to invest. How does it help in that situation?
Got it. So you're asking about like what I do with the houses, or I'm just trying to be clear?
Yeah. So like, for example, where does what do you do, for example? Like you want to find this investment opportunity. How
Mhm.
does it work as far as like putting money into the investment and then getting money out of it?
Sure. So most of the properties that we buy,
Hmm.
we don't put any money down, right?
Hmm.
So now in some cases we do, but in most of the scenarios where we're because we're paying market value or above, and we're getting time because time solves all those issues, we're at zero money down most of the time. However, as an example, you might have a seller
Hmm.
who needs a little bit of money to move, or they
Hmm.
want a down payment. So on a $300,000 house, maybe they want 10, 15, 20, $30,000.
Hmm.
If the numbers work, I have no problem giving them 10%.
Hmm.
So then, we would give them the 10%, which I would use private lenders to do that
Hmm.
and pay them a return. And then I would turn around and sell the property. We typically sell the property to a buyer who is just outside of financeability, like a business owner who's self-employed. He doesn't look great on paper, but they got plenty of money
Hmm.
and they can afford the property. They just need a little bit of time. So we would sell it to them, put them in the house. They would give a down payment. If I
Hmm.
bought it for 300, we'd sell it for a little bit over that. And then there's a monthly spread. So you have a monthly income. And then on the back end, when they get their loan and cash out. So there's opportunities up front on a monthly basis, and then on the back end as well to earn money.
Got it. Yeah, it's like three paychecks, as it's called.
That's exactly what it is. Yep.
Okay. And the as you're speaking of the flow of money, like for the down payment, for the monthly income, the spread, I'm thinking of the use of the bank on yourself concept, right? The use of cash value whole life insurance, where you are becoming the lender. And I think this is a great, and correct me if I'm wrong, I think this is a great way to use the money in your life policy, deploy it, right? Borrow against it, use for the down payment, use for the moving costs for the sellers, get that money back when you sell the property or rent it out, put the money back in, and you have this flow now of cash going in and out of a life policy, and then you control the terms of it. And I think this will play really well, if we approach a recession and then banks start holding back. You've built up your life policies that are essentially recession proof. It doesn't matter what's going on in the banking world. You have access to that money. You can now lend on your own terms and really put yourself in the seller in the bank's shoes. And correct me if I'm wrong, you do this right correctly with the use of cash value whole life insurance.
Yeah, it's a great point that you bring that up. I do have two of the policies, the bank on yourself policies that you mentioned, and they have pretty healthy cash values at this point. And at any point, I could do that if I needed to uh, give a seller money to purchase their property. And
Mhm.
again, using them as the financing. And you can do this whether they have a loan on the property or not. So
Mhm.
you can still use a seller financing strategy even if a seller has a loan, and they have a small equity position and they don't want to give that up to real estate agents and closing costs and moving expenses. You can
Mhm.
really help people out who have a very tight equity position and don't want to lose it. And yeah, you can use your policy. I haven't done it yet,
Mhm.
but I'm certainly ready to do it, especially if things go the other way, which
Mhm.
I'm not going to predict what's going to happen, but they could.
Let's talk about that. So what if we do, let's just say fast forward, we're in a recession, not quite like 2008, but we are in a recession. How does it affect or help this type of strategy, buying on terms?
Yeah. So important question to ask. And there was a little bit of taste of this in 2020
Mhm.
when COVID hit, right? And my history repeats itself.
Mhm.
Okay. And when there's uncertainty, people panic.
Mhm.
It's just the way it is. Okay. So the stock market goes down, Bitcoin crashes, people start freaking out.
Mhm.
And when people panic, they make irrational decisions. They don't think the right way. And in all of those situations, like if you look at 2008, you look at COVID, you look at even right now, like this isn't a time to panic. This is opportunity. Okay. This is opportunity. COVID was a tremendous opportunity, and those who didn't freeze
Mhm.
thrived. This is one of the reasons I believe in coaching, because my coach told me in March of 2020, when, the world was shutting down, he's like, this is not the time to panic. You need to double down.
Mhm.
And I bought a bunch of houses on creative financing during COVID. It was one of the best years of my life financially, and I left my job that year. So a lot of people weren't fortunate. It didn't work out that way, but there was certainly opportunity, and there's opportunity right now.
Mhm.
So if with interest rates rising up to the 6%, basically doubling in
Mhm.
the last several months, buyers are falling through for financing, which hurts sellers because they can't sell their house. So all this is going to kind of rear its ugly head, I think.
Mhm.
But again, I'm trying not to predict.
Absolutely. And as we're kind of winding down, just a few more questions for you. So
Sure.
exactly how do you help people?
I help sellers out
Mhm.
of specific situations that I mentioned, right? The
Mhm.
death, divorce, job loss, job relocation, just helping them move on to the next phase of their life.
Mhm.
And this real estate issue, the house or the property, is blocking them. So I help them with that. And then on the buyer side, and I've had experience on both sides, Sarah, and
Mhm.
as a consumer and as a seller of a home, I've had experience with this. This is one of the reasons I started this business. I help people who are deserving get home loans. Okay. I give them the opportunity as long as they do the right things. And then in terms of my coaching business,
Mhm.
as you heard, I was in corporate sales for 25 years, and I was stuck in a job that I didn't like, and I was missing my son grow up, missing my
Mhm.
family. There's so many people out there in similar situations,
Mhm.
and I've created this transitional coaching business to get people in the right frame of mind, to help them understand that if you feel stuck, you can get out,
Mhm.
right? You don't have to be locked in this prison. And it's really just about making a few tweaks in your life. One of the biggest tweaks I made was the bank on yourself
Mhm.
policy. I mean, that was freedom for me, getting control of my money. I didn't even know it existed for years and years and years. Had no clue. And then I was introduced to your mentor, Mark Willis, and it just changed everything for us, and really helped leave the job. And it wasn't anything major that I had to do. It was a result of getting my coach and getting around different people.
Mhm.
Like I got around different people, smarter people, higher level, like never ever be the smartest person in the room ever.
Yeah, I love that. Absolutely. And I also love that, like, when you're on the fence, right? Sometimes the obstacle is the answer. So like if you're what you're fearful of is the reason why you should do something. Like if you're, being an entrepreneur, being a real estate investor, taking that leap, like the answers to what you want in life are on the other side of that. And fear is, as it stands for, false evidence appearing real. So it's like it's actually not that fearful once you actually proceed with this. And I love how you help the sellers, you help buyers, and you help coach people who want to do this. Now, Brian, how can listeners connect with you and learn more about you?
Yeah, so I think the best way to get in touch with me would be to go to my website. It's w2prisonbreak.com. And there's a free guide that you can download. It's a 5-step guide to jumpstart your W2 prison break, and pick that up. It's free.
Mhm.
And then, you can subscribe to the podcast there as well, which we're putting out episodes every week. And yeah, I'm really enjoying doing this. So, and I love helping people, because I didn't have what I can do now for the longest time in terms
Mhm.
of a mentor and a coach and a voice, right? Like somebody who, like, hey, I've been where you've been, right?
Yeah.
And it hasn't been that long. I mean, like you heard me say, I left my job in 2020, so it
Yeah.
hasn't been that long.
Awesome. I'll include the links you mentioned below in the show notes. I hope listeners connect with you, check out your podcast, check out your book, check out your website. And I'm looking forward to having you back on the show for future episodes.
Yeah, definitely. I appreciate the opportunity. It's always good to meet a fellow Illinoisan.
Yeah.
Yeah,
Right,
if that's
right.
the right word.
Yeah, yeah. Thanks, Brian.
You got it.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.